In the meantime, let's get some insights on the news shaping the markets. And for that, we welcome in Ryan Dykmans with us, Chief Investment Officer at Dunham Associates Investment Counsel. Thanks for being here. Another record. Are you surprised to see the record? Are you expecting more records throughout the back half of 2024?
Well, I think you're right, Nicole. I think there's a lot of upward momentum. I like the AI train comment because without that, I don't think you would have seen these higher highs being met. But with that, my biggest concern is I don't think there's as much risk being priced into what you're seeing today. I think is being very much undervalued and underappreciated how much risk is still out there. So I don't want to be the bear out there saying, hey, I'm calling for a giant drop. But I do think the rockiness that we've been seeing, and you mentioned the VIX earlier, around 1290, kind of hovering there, it's still very low on historical standards. So I think that we're going to see, again, a little spike in the VIX, a little more volatility. It's not going to be fun as we're at these high highs. I think it's going to bounce around a bit more.
So with that, are you expecting, as you said, you're expecting some volatility. If there's a pullback, would you say that would be a huge buying opportunity in your mind, or would that, because you said there is risk to the market, I mean, don't ignore any risks. What is the risk, and if there is a pullback, would you buy more?
Yeah, so it's going to be in certain areas. So the breadth of this rally, as we've seen, is kind of concentrated at the top. And so as those risks come to fruition and we start to see that volatility, the biggest areas that we've seen opportunities tend to be in your small caps, on the value side. So we get very excited about that. We did add a little more there recently on my own allocations that we do at Dunham. So that's an aspect that we would add to, I would say, more aggressively than, say, more large cap growth. That would be an area that, as it kind of gets a little cheaper, we're watching what else got much more cheaper than that in those volatile times. So looking at small caps, particularly on the value side, I think that's an area that we're still very excited about.
Right, understood. I mean, when it comes to the AI train, you said you liked the comment from the analysts. A name like NVIDIA and all the other names in the world of semis and tech, do you like that group?
Yeah, actually, more than that, I like the trickle down, right? I like where this is going to end up. So while right now it's all the headline names that are kind of, they're making the chips or they have the technology that's on the forefront, it's the benefactors of that down the road that I'm actually most excited about. So again, I know value is like that unloved asset class for so long now. Growth's rallied for the last, we'll call it 14 years for sake of argument, but it's one of those spots that I think those companies, kind of like we saw during the initial parts of COVID, where there's that adaptation. I think as they implement a lot of these AI technology, I think they can unlock a lot of value. And we were talking about 45 PE, I heard the analyst mention. As I think of something like that on the value side, which is, a fraction of that amount, you imagine the amount of extra price growth that you can get as those companies on the value side start to realize those benefits of AI, and as that technology comes down to them and helps them to make more efficiencies.
Yeah, understood. I mean, when you think about the Fed, I know the credibility of the Fed's on the line, and Yellen out there telling Powell, do your job. And what do you think the Fed should do, and what do you think the Fed will do?
Sure. So the Fed, it's kind of funny because I think Yellen's one of those who was really good about broadcasting her moves in advance when she was the Fed chair. I think she did a good job of that when she was speaking, out to the public and basically doing those, finance committee depositions. The issue that I run into, though, is that Powell has changed his stance multiple times. And so I don't know if the market believes him near as much. So when he said, originally we were talking about 3 or 4 cuts this year, now it's down to maybe 1. And then next year moves forward, we get, I think, 4 instead of 3. As we look at things like that, the bond markets, I don't think they're going to believe him quite as much. Now we're starting to see, okay, we'll see what we can get. And I do think there's going to be volatility on the bond side because of this uncertainty that's in there. I also think that with the election coming up, you kind of have people who are going to be a little scared. Where do I put my money when I'm worried about what equities are going to do and what bonds are going to do? So if that starts to come up, we start to see that volatility equity side and bond side pick up, I get a little concerned for those investors that are seeking shelter.
What kind of names do you like when you say growth versus value? Maybe
Sure.
You can't name specific names, but give us some ideas whether it's a type of stock growth versus value or a certain sector. What's your investment strategy? How do you put a portfolio together here in this environment for the next 6
Sure.
months, for the next 6 years?
So the next 6 months and 6 years for me actually look kind of similar. We tend to look a little longer out when on the equity side. So for me, the value side, it's going to be an overweight from you versus the S&P 500. If you kind of cut it value and growth, it's going to lean growth. I lean value. Also on the foreign side, I do consider a lot of foreign stocks. So we actually have a much more equal weighting with like the ACWI. So where the All Country World Index might have more like a 60-40 breakdown. The average investor out there has far less than 40% in foreign stocks. That's another area that tends to be more value-y versus the United States. And we have a lot of value names on that side too. So we have been leaning value across the portfolio. And we also like alternatives a lot. So things that can take advantage of some of these shorter term disruptions, I give that to the hands of an outside money manager, because that's what we do here. And so I would use them to kind of help navigate the more short term tactical stuff.
Yeah, gold has gained over the past week. Oil's running two-week gains. Do you like commodities? Is there any commodity in particular that you like to dabble in?
You know, and so the answer is no, is the short answer. And one of the biggest reasons I get a little worried about it is when my mother-in-law and father-in-law start to talk to me about how they're buying into these, commodity structured things. I get a little nervous because once your retail investors start to get too involved, we saw this before at other peaks. I get a little nervous that we're getting higher highs that may not be sustainable, and you could see some hiccups, especially on the gold and oil sides.
Right. Ryan, great to see you. Ryan Dykmans, Dunham Associates Investment Counsel. Thanks for being here, Ryan.